Hey everyone, today is March 24 and we are approaching the end of the first quarter of 2025. It's definitely been an interesting last couple of weeks. We are finally getting a little bit of stability at the start of this week, but I do think it's important to check in on exactly whether we're truly out of the woods at the moment, because I do think investors may be missing certain blind spots in the news stream at the moment, that there are some risks that are yet to be resolved. Let's take a look at some of the drivers of this uncertainty going into the end of this first quarter. I think on top of mind for a lot of people, trade is definitely a big question mark right now. I think the tariff risk basically is still underappreciated in the market. I think there's a lot of flip-flopping that has happened over the last couple of weeks on trade policies. We were talking about putting on trade tariffs on Mexico and Canada broadly, but there seems to be a lot of maneuvering and negotiations that has happened over the last couple of weeks that maybe things are starting to ease up a little bit. But I do think there is a potential that we may be missing the picture, that there could still be more retaliation coming from other trade partners that we still haven't anticipated just yet. And seeing how President Trump has been responding to some of these kind of threats, it does seem he does take a more combative kind of an approach. Thus, are we truly sure that the risk of trade policy being fully resolved through negotiations? I'm not so sure at this point. And thus, that could potentially lead to more volatility if we do have news developing in ways that is relatively negative on sentiment. And I think there are also hidden corners of trade that people are not really focusing on beyond just the risk of tariffs. For example, we're looking at President Trump announcing fees on Chinese-built ships coming into the U.S. These docking fees would effectively render a majority of global shipping to be uncompetitive. And if those costs would be passed on to consumers, I think it would be much more punitive than most of the tariffs that we're talking about so far. So if we are talking about almost 60% of the global shipping fleet potentially being not competitive for U.S. shipping, I think the impact on trade is going to be very similar to the era when we were coming out of the 2020 pandemic era. That disruption and what that did to a lot of costs in manufacturing or retail, I think that may continue to have a cascading effect as to whether that might also impact inflation and all the other things that we've experienced over the last couple of years in a similar way, if not in a more dramatic manner. Staying on government policy, I think another area of hidden risk comes from the employment picture that's happening in the U.S. Since the beginning of the year, President Trump has been restructuring the U.S. government, and about 300,000 people have either taken early retirement, job buyouts, or been made redundant since the beginning of the year. Now, that only represents about 0.25% of the U.S. total workforce of about 169 million people. But there have been studies to show that 2 to 3 additional workers work in auxiliary or support position for each U.S. government worker. So if we were to take those auxiliary workers into consideration, up to potentially 0.5% to 0.75% of the U.S. workforce would be directly impacted from the restructuring of the U.S. government. The U.S. economy only grew 2.3% in the last quarter of 2024. That was the weakest reading in the last 3 quarters. If we were to take the potential increase in unemployment, that would push that growth rate down even lower. With U.S. unemployment currently sitting at 4.1%, once you factor in the impact of the U.S. government restructuring on the employment rate, we could see unemployment rate being closer to 5%. The last time we saw unemployment at these numbers, you would have to look at March of 2020 and also mid-year of 2008. I don't think we want to make those kind of comparisons. So I do think uncertainty being such a big theme for this year, that is now starting to flow through to consumer and business owners' habits as well. Whether we're going to see sentiment start shifting towards the later half of the year, whether for both business and the public to start ratcheting down their spending and to take a more defensive position, that could be the tipping point for the U.S. economy to go from the relatively slow rate of growth during the Biden years to basically a full-blown recession. Again, we will have to wait and see until we get more clarity between tariffs and also the employment picture before we can truly find out exactly what that might look like. So what are some of my own strategies to investing in this uncertain environment in 2025? For me, staying cautious and nimble is going to be my key focus for this year. I think cash is not a bad asset to own right now, considering you can still generate a 4% return passively through a decent savings account or CDs. It's not a bad return considering, for me personally, I'm expecting a 10 to 12% return year if I can invest prudently. With a 4% return, you're already a third of your way there without taking on any risk whatsoever. And with that cash ammunition set aside, if the market does stay volatile this year, I would expect there will be plenty of opportunity for us to purchase when fear is running amok on the street. And that might be one of those kind of situations where we could really drive our returns for the rest of the year. The market very well could go down, but I can also expect the same thing of the market rebounding sharply. These are years similar to anything like 2018 when we have the sharp rebound within a single year despite having the growth fears. And also, if you look at 2009 coming out of the financial crisis, that was probably one of the best opportunities for you to get into the market. So despite me being cautious on the market, I do think that there are opportunities. So some of the sectors I'm interested in for 2025, I think one of my favorite sectors would probably be gold and other precious metals. Considering gold had a record year last year, we're approaching almost $3,000 an ounce for the metal. If we do hit a recession and if the Federal Reserve does take a more aggressive approach on cutting rates, I think that would give gold a even better investment case going into the later half of the year. And personally, I think silver is also very much worth watching. It has been languishing at the $30 to $35 level. So if you're looking on a historical kind of basis, it's relatively undervalued to gold. So if precious metals start becoming more of a mainstream theme for the year, I think people will probably start rotating out of growth names like tech or Bitcoin, possibly into the sector. And thus, if we do see that rotation, I think the undervalued metals in the space could potentially have a pretty good year. And if the base case scenario does prove to be correct, I think other interest rate sensitive sectors, for example, like real estate or mortgage REITs, would be interesting sectors to look at. Now, I would caution people when looking at real estate. I think you have to be fairly specific about the kind of assets you're purchasing. I do think that commercial real estate is still going to have a restructuring period. So are there bargains out there right now? Absolutely. But you really have to be careful picking out your winners rather than going just broadly investing in, for example, a REIT style ETF. I would be very specific in picking the winners in the space. For me, I think Class A commercial properties in tier 1 cities probably will do far better than class B or C buildings in your second or third tier cities. And the sectors I would personally avoid would be things like the auto sector and defense. These sectors potentially would be greatly impacted by any government policy. So, for example, in the case of the auto industry, most of their input costs is potentially impacted through tariffs. And there's the potential for any of the disruption that could happen in trade. A supply chain for a auto manufacturer could be severely impacted if there is a extensive period of turmoil in any of the trade situation right now, that I just don't think I would want to be in that space at this point until things starts clearing out a little bit. And secondly, when it comes to defense, not only would they be impacted by directly what government cost cutting is having on that space, but I think there's also the other aspect that America is a global player on the geopolitics kind of a aspect. I do not think we just don't look the same. Whether our European allies are still willing to buy as many F-35s from Lockheed Martin, I just don't know. So I do think there's a chance that some of these defense companies might have a very different revenue profile over the next coming years. And again, until I have more certainty, I think there are other things that we can be buying here in the US while things play out in these space. So what about you guys? Is there any specific risk in the market that you're watching out for? And what is your own investment outlook for the rest of the year? Leave me a comment below and share your thoughts. And I'm currently documenting my journey on building $1 million portfolio. So if you guys are interested in keeping up with that, I have included a link to my portfolio tracker in the description box below, so you can track the moves that I'm making for the portfolio and also the positions that I have right now. And if you like this kind of market updates, or if you would like to follow along on my investment journey, hit that subscribe button. Would love to have you guys on this journey. Stay vigilant in the market, and I hope you guys have a good rest of your trading week. I will check back in with you guys on the next video, and I hope to catch you guys on the next one. Take care, everybody.